Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is the 19th of July, Sunday, and just watching the British Open here and looking at charts. And what we have up here is a chart of the S&P 500 since the March 9th low in 2009. And it's been a bull market. It's really strong move. You can see I've been very focused on this last little pattern here. For the longest time, we were talking about how this was narrowing over this whole range, and we kind of abandoned that back when in October of last year, the market rolled over and kind of broke out of that range and then recovered and kept going higher. So and we talked about that along the way about how that might be suspect. I've never seen one that long. We've got a shorter one building here, and last week I was saying that it was unlikely that we were going to make new highs because I thought this last ABC here coming out of it, this last zigzag coming out of this would be the end of that move. And now I think just the opposite. I think we're probably going to get another little zigzag to the top of this range and probably get new highs. We had a really strong week last week and came really close to taking out this high right. Let me zoom in here and I'll show you. This is the last week right here, and we came really close to taking out this high right here. And I think it's probably going to happen that we take out this high, or we don't take it out and we just roll over and go down a little bit. But probably not all the way down. Could go all the way down, but I think we'll get a lift back up. If you can, I'll back up here in a second, but I've got it kind of marked here with these little blue dashed lines. These ending patterns are kind of marked by these up down, zigzag patterns, up down up, down up down, and until it completes. So now it is looking to me like we'll probably will get a new high. Sorry about the that's one of the problems with kind of predicting and being early, and as you know, the market's going to roll over when it decides to roll over. But you can see kind of a zigzag here, a zigzag up where this makes a move up, and then we got a zigzag down, which made a move down, and then you got a zigzag another up, which made this move up, and then zigzag down, which made this move down, and we should be getting another little zigzag up. We'll probably break out above this red line, so I would say we're probably looking at around 2160, 2165 or so on the S&P 500. All the gaps in the market have been closed except for the NYSE, and I will show you how close that came to closing, which is another reason why I think we're going to get a new high. That's the wrong symbol. It's NYA. So I'm going to have to go to like a 60-minute chart or even a 30-minute chart here to show you. You can see this gap right here. This gap right in this area. So it needed to get to, let me zoom in a little bit. This low here was 11,033.95, and it got, let's see, which one of these is the high? This one right here is the high. It got to 11,032.61, so it needs to get basically to 11,034 to close this gap. In fact, let's go ahead and put that on the chart. I don't know if I can get it that accurate, but I will try. 11,034. If this were the Russell or something, I wouldn't be as concerned about it closing this gap. But the NYSE is it's a fairly important index, although it's not reported daily. But we look at the NYSE up-down volume and advanced decline numbers, and so I would say this is pretty important index. and would look for this gap to close at 11,034 before we start even having the chance to potentially change trend in a downward direction. So the Wilshire closed its gap, got a new high. New high here, and there was a gap right in this area. Basically, every other index closed its gap except the NYSE. You can see, I'm going to show you volatility. Volatility was way down. You can see we're back down to the bottom of this range. Early in the week, volatility might start lower, but I would say before the end of the week, volatility is going to creep up, probably, somewhere to the midpoint of this candle. And the reason I say that is because it's really at the bottom of its range here. It's not a whole lot more for it to. Of course, it could go lower, but it's in terms of probability. It's not very probable that it goes lower. The market has been stalling and hasn't been moving very rapidly at these levels, and so there's not a lot of juice there for the VIX to go a whole lot lower. And couple that with the fact that it's already at the bottom of its range, it's probably not likely to move much lower. Even if it does, we'll probably see it move earlier, lower earlier in the week, and then reverse and start to go back up. Let's look at some of these other countries. Germany, there's still a lot in the news. Greece is, I guess, going to get their bailout, $100 billion or thereabouts, and so it's another kick the can down the road, and maybe we'll hear about Greece in another couple of years about how they're, missing payments again. But I don't know why these people keep loaning them money. The only reason I can figure out that they're loaning them money is that it doesn't really cost them anything to loan the money. They just print it up and and give it to them. So that's the only thing that makes sense to me. If this was real money that they were really having to earn, and if it, then they probably wouldn't be so eager to give it to them. Because Greece clearly has structural problems. I heard a figure the other day that their government pensions were roughly 18% of GDP. And to put that in perspective, the U.S. pensions, I think state and local, state, local, and federal are about 6% of our GDP. So as bad as you think ours are, theirs are 3 times worse. Let's look at let's go back and look at the UK and Japan. The UK's kind of chopping around here. Looks like it's finally done going down here and wants to go higher. And I would look for the most immediate high being somewhere in this area here, like right there. And I'm going to take this Fibonacci off for now so we can see the numbers easier, or see the price action easier. So I would look for the UK to move up into this direction. If it's going to make a new high. Now look here, it did break this trend line now, right? So the other possibility is it could come up into, it's already there actually. It could, next week is going to be real critical for the United Kingdom. We're gonna see what's going to happen here. See if it pierces this line and goes up into this DP, or if it starts to roll over. If we get a candle next week that looks more like this, it might be over for the UK for the intermediate term. And on the other hand, if we get a candle that looks more like this, then I think we're probably going to move all the way up into this DP. Hope that makes sense. I've been talking about that for a while, and it does seem, it probably seems confusing to some of you, where when I'm talking about, well, it could do this or it could do that. I mean, that's the way the market is. You don't know which way it's going to go. So that's why what you do normally is you try to buy near a level where it's not very far away from your I'm wrong point. So, for example, if let's say we were looking at this right here, this area right here, and we took a position and said, well, we're gonna decide we're gonna go long right here because this low down here was kind of broken, and we made a higher low here, and we closed above this low. I mean, this is a perfectly legitimate reason to take a position. And where we're going to say we're wrong is if it closes below here. And so here's our risk. Our risk is this amount of distance right here. Now, if you move forward and you start to move forward, you can see the market runs pretty good ways. Well, I don't know what I just did there. It runs all the way up into here, basically. So your risk was, from here to here, which was about 1 point, and your reward was about 2.5 points. So that's a pretty typical. That's a pretty typical reward to risk that you want to kind of set up for yourself. Let's look at the euro US dollar. With all that news in Greece, the euro is just kind of doing nothing right now. It's just chopping sideways. You can see this. We're kind of in this. It's kind of a consolidation / congestion area that's being developed right in through here. I would say these are probably the lows. Well, you can't really even say that. Certainly the euro is in a downtrend. We have a low, we have a high, we have a higher low, we have a higher high, and so on and so forth. We're making an uptrend. But that uptrend is at risk here. And we could actually go down here and make new lows. I mean, it's certainly possible. This is a pretty ominous looking candle. So the best thing to do is maybe not trade the euro at all unless you're just going to trade, unless you have a bearish stance, you're going to trade to just below this low, which would be a good trade. Let's see, what else? Let's go over and look at the dollar. The dollar looks like it's through going down for the time being. We've been talking about the dollar for some time, ever since everybody started to pile into the dollar, and you can see we had a little correction here down to this area, and I had a little DP area set up here, and it looks like the dollar now is trying to make its way up into this zone here that we have had on the chart here for a while. So I would look for the dollar to continue to make its way up to that. The bigger picture on the dollar, you can see here we had this huge move down, kind of consolidated and then broke out of this consolidation. The dollar's probably going to make its way to new highs before it's all said and done. But it's not going to go straight up there. This was a pretty good move here, but you're not likely to see too many more of those. It's probably going to meander its way up here. Probably have to take little trades along the way, unless you just wanted to say, hey, the dollar's going to go higher here, which means gold's probably going to go lower. Now gold may not go lower straight down from here. In fact, let's go look at gold. One of the things you might hear me say all the time is the market never moves straight up or straight down. So you can see I've got a zone marked right here in this yellow area for gold. You can kind of see a little chop here, a little up down, and then if you get an up down, you usually get an up. So what this is looking like to me is that gold is doing this, So we'll probably get up into this area. It's probably not a bad place, maybe not today, but within the next week or two to enter gold and probably trade for this 1350 area. I think that's a perfectly legitimate trade. If we get, let's talk about some potential entries there, because you're really at a place where you could almost enter now. So let me explain that. This is a pretty big candle here, so sometimes what you'll get, there's a couple different things that could typically happen here. One, you get another move down, and then you get kind of a move like this, and then maybe a tail on it like that. That's one possibility. Another possibility is it's through going down here at this point already, and you get something like this, okay, where the body of this is inside the body of this one. And then what you want to look for next is a candle that looks like that, where it closes above this candle's high. And if it does, that's a good entry. And of course, your risk at that point would be from here, to actually right here. Okay? And then your reward would be from here to potentially here. So you can see that's a pretty good reward to risk. That reward is probably four to five times higher than the risk area. So gold is kind of setting up for a pretty good trade here. But what we don't know is we don't know if we're going to get an inside weak followed by a close above that, or if we're going to get a little bit more down with like a hammer and then a close above that. So I would say we're probably at least 2 weeks from making a decision, and potentially 3 or even 4 weeks for making a trade decision there. So hopefully that helps you on gold. There's a lot of focus on gold. A lot of people are looking at gold. So a lot of people are looking at commodities, period. And oil is another commodity that people are looking at. You can see oil had this big run up into this 147 area. Came down during the financial crisis pretty hard, and then ground its way higher. But notice here, this high right here is lower than this high. So the high was way back here on April of 2011, and then it kind of chopped, and then you can see here it sold off pretty hard. Now, what it looks like to me, it really looks like the downtrend really started about there. So let's look at that. So oil, is definitely back in its downtrend here, and is probably going lower, and probably if we wanted to look at kind of an intermediate term area for oil to go to, I would look for oil to go to just below this low right here. Whoops. It's not cooperating. There we go. I would look for oil to move down into this area around, what is that, 40, below 42 to, say, 40 area. And then we'll get a pretty good bounce, probably back up into this area here, maybe not quite this high. Sometimes when you see, I can see the downtrend kind of beginning here, but really it started back here. And sometimes when you see that, the bounce won't quite be as high. So I would when oil bounces, I would look for oil to bounce into this area potentially, and then make another low. And you might have that happen a couple of more times before oil then starts making its way up to the upside. We're in a multi-year downtrend here. It's certainly decelerating, but there's going to be a lot of up and then back down and then up and then back down. We're not at a point where you could say let's go long oil and go to sleep. That's a little ways down the road probably. Anyway, that's what I see here with oil. Let's go back to Let's go back to the profit charts, see if we missed anything here. We didn't talk about interest rates. How could I have forgotten about interest rates? Okay, the 10-year Treasury pulled back this week, as you can see. But you can also see that trend line that we put down last week, that little dashed red line, this one right here, is still intact. We had a little bit of a breach here during this pullback. This is pretty typical pullback. Once you've had a move up, you kind of get one of these. You can kind of see it. Whoops. That's not good. You can kind of see it here. It's a down, up, down. Kind of like what we saw on the dollar, what I had marked on the dollar. And you might see this instrument make maybe one more low like this, and then we should get a pretty good move up after that should take us to, I mean, these rates in this next move could go as high as 7%. So hopefully you're out of bonds at this point. You might be able to get another pullback next week, which would be another good place to get out of bonds. But pretty soon here, within the next 3 to 4 weeks, you're probably going to see a big move out on this chart, and it's going to be a big loser for people that are holding bonds. Let's see, is there anything that we need to look at on the... You can see bonds here. There's nothing really to look at this week on. We can look at the DAX. The DAX looks weak too, but I'd say near term it's going to this 12,097 area, and so look for that to happen. But the DAX, you know, like I said, we were looking at the Germany chart earlier. The DAX could have already rolled over, but it's not been confirmed yet, so look for the DAX to move up into this area before it makes its next move down. I guess that's it this week, everybody. I don't have a lot that's clear here, other than we should, and let me just go back to that because it is important. I've kind of sketched it out here, so it's, whoops, that's the SPY. I kind of sketched it out here so it would be easy to see. But you can kind of see this up, down, 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 up. So what we're looking for here in the next week or two is another, maybe 3 weeks, another down and another up. And then this pattern then should be complete, and usually we'll get a break back to the start, which is back here, which was the October 2014 lows. So let's be a little bit more patient. If you're still in, stay in. Although I would say there's not much more to gain here. If you're still in this market, or let's say you got out back in here and you felt pretty good through this sell-off, and now you're starting to feel bad because you feel like it's going to go back up, there's not much more here to gain. If we just draw a box here off of the previous high back here, you can see there. I don't know what this is, but this is like 0.5% or something. It's almost not even. It's certainly not worth the risk, given how violent. When this pattern completes, how violent the move is back down. I mean, you can easily wipe out whatever you're trying to get here to the upside by trying to capture that in this move when this pattern completes. So hopefully that helps out. Until next week, we'll see you guys. The dogs are barking, so it'd be a good time for me to stop. We'll see you next week. Thanks for coming in, the Middle Class Investor. Goodbye.